18th of October 2023, and I'm going to be making my weekly prediction for SPY. Now, I am making this before the market opens so that this prediction is still valid and I don't have any prior information. But before getting into the video, it's important to make the disclaimer that all information in this video is completely educational, and therefore it is important to conduct your own technical analysis before entering a position in the market in order to avoid unnecessary losses and to ensure that your risk is met with your risk tolerance as well. So now that we have that out of the way, let's get into the video. So first we'll go over the monthly charts. As we can see, there still is this long-standing trend line of just around a year of upwards movement. Then in the month of August, we had a hindrance to this movement, which is like a stop. Then here, September, we had a huge bearish month, a large red candle. And then obviously we can't predict on the current month yet, but from this we can see there's a break of the trend line. So in itself, it is quite a bearish signal. However, we have to go into the weekly and daily charts to see how this affects the prediction. But that's all we can get from the monthly chart so far. So we can see from the weekly chart that this was the part where the trend line was broken. Now, here, this is the week that we are at right now, the 9th of October 2023. We saw that last week as well, we had the resistance at 432.84, which did get broken, but it shot down massively towards the end of the week due to news. So this week as well, we have the same resistance. However, we're going to be a little bit more mindful that the volatility is pretty high this week, and Fed Chair Powell is speaking as well. So this is something which will affect the market quite heavily. So we're going to have an even wider range than last time. So instead of just keeping this as the resistance 432.84, we're going to have the high of the candle, because we know that if there is to be a bullish movement after the last two candles being so strong, which we'll see in the daily charts, then there needs to be quite a large range. So the resistance for this week will be 437.34, and obviously if it does continue to go down, we should have a lower support, which is going to be the low of this candle at 427.01. If you look at the RSI, it's gone down. It has continued to go down. However, it shot up a little bit. The average has now turned down as well, which is in fact quite a bearish signal. So we can see that even if the market goes up, we have a divergence here. So finally, let's head to the daily chart where we can see this price action in more detail. So obviously, technical analysis was saying that the market should go up, which it did go up for almost the majority of the week. And then obviously the last 2 days were two very, very strong red candles, bearish candles. So if we take a look at what happened here, these two candles are quite interesting because it shot down until the close at 433.66. Then it opened at 435.21 with an opening gap, but then it was filled. So not necessarily a gap, but it shot upwards at the open. So that itself would have been a bullish signal. But then the bears brought it back down, showing very strong conviction. You can see that the volume as well, the numbers are very, and the graph shows the volume was significantly higher on the last 2 days than the other days of the week. So we can also see that bearish conviction is quite strong for this week. So we are going to have a more conservative approach this week. So the RSI also has now tilted down, obviously, but the average is still going up. So we have a minor divergence. However, that is subject to change. So obviously, we're going to go with what we find out from the weekly charts and take the high and low of the candle, since we need to have a broader range this week in order to ensure that there's no whipsaws like this week. So let's head over to the Excel chart where we can review this prediction in a little bit more detail and see how the option chain supports or does not support this prediction. So, as usual, we have no trade yet. We wait for the candles breakout. Buy when it crosses the high at 437.34. Sell when it falls below the low at 427.01. So we actually have an approximate around 9 or 10 point range this week, which is quite a large range, with a target of 1% and 0.5% if it's a trade taken on the last day, with a trailing stop loss. If the target or stop loss is not hit, any trade is entered, then we take the close at the closing price on Friday. The max OI for the monthly expiry, since there is no weekly expiry for SPY this week, so it's 420 for CE at 72,356 and 420 for PE at 191,315. So this is the same as last week. The monthly PCR is 2.07 and the weekly trend currently is down. However, we might be seeing a reversal. And the monthly trend is currently up since we saw from this trend line. And last week, obviously, we made a loss because of the last two candles being so strong and going downwards. So we did actually make around a 0.5% loss. However, that's okay. We will see what happens this week. And that concludes my video for the prediction for SPY this week. And I'll see you next week where I review this week's prediction and make my new one. But obviously, if there are any relevant changes to this prediction, they will be covered on this channel. But as for now, this is what we have. So thank you for watching, and I'll see you next time.